All right, hey guys, it is Sam here. Midday Monday, September 25th, and I thought this might be a good time to take a look at. Let's take a look at Bitcoin. Um, it probably should not surprise us that the correction that we're experiencing here is turning out to be quite complex. So, given this very pretty five-wave sequence that we had on the way up, and now what's turning into a rather complex correction. This probably shouldn't be surprising given the environment globally, given the environment politically, with the impact that we're experiencing in the entire cryptocurrency world, the cryptosphere, if you will. So it shouldn't surprise us, I suppose, that we've got a complex and a difficult correction underway, and there's opportunity here, but it requires a willingness to look at the market and maybe take smaller pieces out of it, because the market is, you could say it's choppy, you could say it's inconclusive, you could make the case that the best place to be is on the sidelines until we get some more resolution of what we're seeing here and we can approach with more confidence. But my purpose here is to hopefully teach you something, as well as present some opportunities where perhaps we can get into the market with good risk reward relationships and see if we can get ourselves into the market. So we have to recognize that we have a natural bias to the long side as crypto traders, right? Because of the remarkable performance, we have to acknowledge that whether consciously or subconsciously, as with most assets, there's a natural bias to the long side. So when we're looking and trying to understand a correction, we've got to be careful about being too quick to look for the long trade on the assumption that the market is simply going to move out of this correction and we go off to 5,000, 7,000, 10,000 and beyond. So we got to break that down and say, can we position ourselves in the market for low risk, high reward opportunities? But to do that, we've got to try and analyze what's underway. And my view is often when it's difficult to read it in the shorter term, the best thing to do is step back and look at it on a larger time frame. So I've got in front of us here Bitcoin against the dollar on Bitstamp on an 8-hour chart. And I think I've left this this very pretty five-wave sequence with the median line, with the pitchfork on it. This is an Andrews pitchfork with the modified shift applied to it. And all that's doing, if you're not familiar with that, a modified shift is taking the three pivots and it's taking the median line and it's bumping it up by 50% of this distance here in this swing. So you can see that. I mean, it got it to the tick, right? So this was just absolutely technically as good as it gets, right? And then add to that, we had this beautiful retracement here, which got it right to the tick, right? So we go to the 382, and then we go right to the negative 23. So I guess the point I'm trying to make is clearly there's algorithmic activity here. Clearly, right? So algos love to use structure like this and market geometry. So when I see this on the way up, I want to look for it on the way down. So just to keep the chart from getting too messy, I'm going to take this off. And I'm going to apply the same thing to what we're seeing on the way down. So let's go to our low here, to our, let me get that right on it. Where's my high? Let's go to the edge. Okay, so there, and again, this is the modified shift, right? So we're taking this swing distance. So you see, if we don't modify it, it's too steep. So let me just show it to you so you see what I'm doing. So here's the original. Okay, and you can see we go down right to that median line, but now we've moved outside of it, right? So this. Right, again, algo activity, right to the median line, and the expected reaction is that we go to the outside median line, and now we're through it. Well, now we're through it. We don't necessarily need to discount these pivots because they were. So what I'm going to do is apply the modified shift, and I'm just going to take this down by 50%. modified shift. And you can see that this now we've gone down 50% of the length of this swing, and I've added to this the 1.5. You know, I suppose I should add the 2, but let me just, so I'm clear in what I'm showing. So I've got the 1.5 on. I'll put the 2 on as well. Okay, so you can see we get to the outer. This is 100% of this distance here from the median line to the 100% to the outside median line, and then there's 150, there's 200% of it. So now we've got nice containment of what we're seeing here, and the market seems to be responding quite nicely to this structure. So I want to pay attention to that. All right, so obviously you can see we came up, we hit the median line, reaction, we come back down, up to the outside median line, reaction, we come back down to the median line. So you can see we've got nice structure here, and the market is responding to this. So I want to pay attention to that. Now, you know, we're getting, once we get into a complex correction, it becomes a bit of an exercise in an intellectual pursuit to try and label the wave count structure. But aside from that intellectual pursuit, I caution you to get to the potential of getting too caught up in trying to analyze what wave is what wave. And it really, at the end of the day, all we really care about is there a trade here, and can we turn a profit? Right? Can we take advantage of what we see here in the market and our knowledge of how the market will typically respond? Can we use those probabilities and create a trading environment? So, I mean, we can get absolutely down to the crazy granular level here on wave count. So, here I have it on this. Happens to be on Kraken, but here I've got this wave count structure here where it just gets very, very convoluted, and we can see the complexity here, right? I mean, we've got a 3-wave. We can find 5s and 3s all throughout this, but really, what we're doing for us, right? Other than helping us maybe quantify this chaos and put some structure to it. So as we look at that, I propose to you, has it benefited you? Have you been able to take these trades and make money as a result of your wave structure, right? So I continually propose to you that the wave structure should be secondary. It should be secondary. It really is only truly valuable to you a little bit after the fact, right? Once you can quantify it, once you see the resolution, then we can say, okay, well, I know now that I've got an ABC here. But we had great potential for this to be a 1, a 2, a 3. We came right to potentially a 4 here. Here was the wave 1 low. We come to that, we react. That happened to be right at a 50 as well, and we don't follow through. So now we got to relabel it. So there's this intellectual pursuit, and then there's the reality of trading. So when you get caught up in this wave within wave within wave and readjusting your count, and what is it, and do we have a complex? Are we dividing into a triangle, or is this a WXY? It just becomes too much, right? So as traders, do we care ultimately? There's value here, but when it gets that detailed, I would encourage you to come back to a larger time frame and say, okay, what can I see if I just go back to structure and I look at my fib draws? Again, I propose to you that the fib draws are what dictate the wave structure. So looking here, if I do nothing other than the most simple wave pull, or pardon me, fib pull. Well, I can see, okay, for my first one, well, we went up to that little window that you often will see me reference, right? We went a few dollars past it. That's the 618 to the 65. There's a few wicks that get past it. That's the push for a new high. It fails, and then down we go, and we go down hard. We go to the 23, a little reaction to the 618. We blow through, and then we go all the way to the 100%. So, as we all know, this is a severe correction. Severe correction. So now, what are we doing? Okay, so let's just extend this, and let's go down to our last low. What can we learn here? Well, from here, we've got to conclude that the only thing we can say with certainty is that we remain bearish until we take out the 618, 65 window, 65% window. We remain bearish. It's bearish below that level, right, which is up around 4,200. You can see what's happening right now. We've just come up and we've hit the 50. Now I've left a few key pivot levels here. This was important to us as prior support. You can see it was hit a couple of times. When that broke, that's when we really broke. We came back, went through it a little bit, and now we're hitting it again. It just happens to be the 50% of the all the way halfway back. So we're bumping, as you would expect, we're bumping into this prior swing low, creating support, or pardon me, the created support now creating the resistance, and the 50 almost to the tick. So what can we see there? Well, is there a trade there? Absolutely, there's a trade there. You could put on a low risk trade there looking for a move down, because where's our negative 23? We're all the way down here at 2,500. So that's from approximately 4,000 to 2,500. Is there a trade there? Oh, yeah. Yeah, there's a trade there. Right? Do we want to be short Bitcoin? If you're just a pure swing trader, you don't give a shit. If long or short, there's the 50, I'm in the market. Right? So I think what we're all trying to do is evaluate when the correction is over so we can get long again, because that's where our natural bias is, which is where I started. But there's absolutely a trade there. You could put a stop just on the other side of that, anticipating that we've already come up and tested this. Absolutely, that's a monster trade, right? But let's keep it simple. Let's keep it simple. Let's go back the other way. What's happened coming back this way? Well, all we've done is go down to the 50 here. Now, take note that when we hit the 50, we also hit the median line. And we know that these median lines have been important to the market, i.e. algo activity. Algos will take that. So we're at the 50, happens to coincide with the median line, and now we're moving higher. So really, at the end of the day, the only thing we can really say with certainty is that we're caught between two 50s. But wave count aside, all of this, this is an intellectual pursuit. Is there value? Yeah. I'm not saying don't do it, but when it comes down to trading it, what can we really say with certainty? We're between two 50s, and until that resolves, it just becomes a matter of you've got to be pretty mechanical. So the trade here at 39.79, you need to already be in the market, right? You need to be short already. Maybe you've tightened your stop up just to the other side of the 50. Right, we've got news in the market today. We've got the Korea news. We've got a lot of volatility. So there's certainly a trade there if you're not already in. You can make the case you could still get short. You can still get short there. We don't get too far away from the 50. And where's your target? Your target is down here at 2,500. That's a monster trade. But the first thing you're going to have to do is get through this 50, right? That's already been one point of support. Then you got to get through the 618. You got to get through that, right? So do we get all the way to 2,500? No, who knows? No one knows. But is there a short there? Yeah, there is, and that's without any wave count on this, without any wave structure. Sometimes it can be counterproductive because it can lead to the paralysis of analysis. What can I say with certainty? This median line structure has been important to the market. And of course, note the 1.5 catches it right here as well. So you've got a little confluence of structure telling you that there's a short there. But, if we go down, let's go down to the 4 hour, because this is where, you can get a little more nuanced with it. Well, you've got potentially now, if this is the turn here at roughly 4,000, we can say we've got an ABC, which is counter trend. So this would be corrective to the larger move, which remains down. Can we say that definitively? Not really, because we got to see what happens when we get to this swing level here, because we could potentially have a 1, 2. That let's measure it so we can say with certainty. Could that be the 3? Well, we got to be 100% of the 1 would be a good clue. Yeah, we're through it. So yeah, you absolutely could have, this could be a 1, a 2, we've gone up to the 3, we'll come back down here, find support here at the prior 1 wave high, and then we go up again for a 5th. Right, but if that's the case, your target here is, up around 4,200. So you'd be looking to be a buyer at 3,800 to 4,200. There's a trade there as well. So that kind of brings me back to the idea that without more clarity, perhaps the best place to be is on the sidelines until we get some sense of, excuse me, how this resolves. How do we resolve? We're struggling to get continuity in trend direction. We're getting 3s and 5s going both ways. Right, so if I go back here, you can see we had a 5, we've had a 5, we get a 3, we get a 5. Oh, we got a 5. Oh, trend is down. Now we get a little ABC. That tells us perhaps we're going back down. That's that area we had that was so potentially so pretty. That's the 4. We go down for the 5. Then we get some resolution. Well, that's not what we get. That's not what we get. So that the wave count has to change. Well, now we've got a 5 going up here, and we've got potential to get a wick up into the median line here at the 5. Right? So is the trend now up, or do we have just an ABC? Right. So we have a lot of conflicting signals. Here. So again, perhaps the best place to be is on the sidelines, unless you want to try and punch out little singles, and you recognize that you're not trying to catch the move, from 3,500 to 10,000, but you're just trying to catch, some profitable trades with reasonable risk reward. That's a really valid approach to the market here. If you like to be in the market, right? Going to the very large scale. We have some, here it is with an XY on it. One of you guys was good enough to send over a count this morning with this potential wave count. So this is very valid. And if you're not familiar with WXY, the X wave is just a way to connect two ABCs. It's relatively simple. Right? It implies a complex correction, and the complexity is simply the connection of two ABCs. So we've got the very clear ABC here. X wave is corrective, right? So we would expect 3 waves in the X wave. Corrective. And now we head down into another ABC, connecting this ABC with another ABC over here. That very likely could be the count. Where does it invalidate? Well, if we're going to hold here, take note now. We're right at the 50 of the all the way halfway back. We happen to be also at the 786. Let me draw it so you can see it. We're at the 786 of this move. Look at that overlap. We go right to the 50 to the tick. There's the 786 common retracement point for a B wave. Here's the A wave, that A wave low that's sitting right there in the dash yellow. So we could very easily, let me put the wave on it. We could very easily be seeing an ABC, right? Here's the negative 23, which happens to line up with the 50 of the larger move up. Very reasonable scenario here. But these are all just potential. They're all just potential roadmaps. Right? So I would propose to you that the trade, as we sit here right now, is to be short Bitcoin with a stop on the other side of the 786 and this wave 1 low. That's really the only reasonable trade that I think is there with the market sitting right at this level. Now, where does this get invalidated or less likely? If this turns into some sort of an impulsive structure and we get beyond the 618 here. Now, technically, you could still have an ABC. You could have some sort of expanded flat, but you'd be suspicious of it if you got impulsive here. And that's just going to make the correction all that more difficult to analyze with an Elliott count because you're getting so many conflicting signals. Right? So I guess my broader point to you is, when in doubt, take all the wave count off and just pull fibs. If the wave count helps you with organizing the material, then great, then use it. If you like the intellectual pursuit of it, good. I like it too. But from a trading perspective, we're looking for low risk, high reward. There's the trade. There's the trade right there, to be short off of it. Much as I don't like to be short Bitcoin, that's the trade, in my view. Now, if this breaks and we go up higher again, perhaps now, as I like to suggest, we're looking for 2s and 4s. If we break up here and we challenge the 618, then maybe we've got a 1, 2, and there's a big 3 up here. We retrace. We're trying to catch the 4 for the final push up. So that's my thoughts on it for today. I would tell you to be cautious in the market right now. It's there's a lot of mixed signals. So that's it for Bitcoin. I'll be back with some other currencies to look at a little bit later in the day. But I just wanted to at least get this out to you guys with regards to what I see in Bitcoin middle of the day on Monday. It's going to be interesting. Okay, guys, that's it for now.